I definitely would like to talk about tax efficiency with plan giving. So I think it's really important for people to understand that there are smart strategies in terms of trying to avoid taxes with regard to what type of assets you put in your planned gift. Particularly, we talk a lot about IRAs. IRAs are actually the simplest planned gift because all you need to do is change your beneficiary to whatever percentage of the IRA you'd like to go to the Exploratorium. So for example, you'd like the Exploratorium to get 20% of your IRA because you have other charities you'd like to give and so on. That's the best way to do it because, first of all, changing your beneficiary form, you can do that online. You don't have to get a lawyer or pay a lawyer or anyone. You can just go online, change it, and then it's done. And Exploratorium will get the money when eventually time comes. But also the tax efficiency of using IRAs, because if you give your IRA money to your children, they're going to have to pay ordinary income taxes to take that money out. Whereas we are a nonprofit, so we don't pay any taxes. So we get the full amount. So, for example, you have $100,000 and you give it to us, it's $100,000. Whereas if you have $100,000 and you give it to your kids and they pay 25% tax, they get $75,000. So it obviously depends on your individual situation as to what you would like to do, but tax pre-tax money like an IRA or 401k. Also, Jason talked about appreciated securities. It's also really good. Why don't you talk a little more about that as to why that's good for plan giving?
Absolutely. And David, with that explanation on IRA giving, there's a job for you at Bernstein when you're ready. If the Exploratorium will let us borrow you. That was awesome. With respect to appreciated securities, for folks who are long-term investors who've owned stocks like Microsoft or Nvidia, maybe you have an S&P 500 index fund that you've had since the aughts, and it's up, hundreds of percent over time cumulatively, and you're looking at that and you're thinking, wow, what can I do with this? Well, if you give those shares to the Exploratorium, you do two things. You've fulfilled your philanthropic goal. You've also avoided any capital gains tax from that appreciation forever. The Exploratorium doesn't owe any taxes. The organization that you give to doesn't owe any taxes from that. They can sell that and turn it into cash the next day. And so you get also the tax deduction based on the fair market value of your contribution. And all that you've paid for out of pocket, what was the cost to you for that gift? It was just your cost basis, right? It was the amount that you initially paid when you purchased the asset. So this is a great way, particularly, some of the phenomenally successful technology companies that are here in our backyard. I think about Nvidia or Apple. These are stocks that are in almost everybody's portfolio at some level. The appreciation is in the hundreds or the thousands of percentage points for people who've been long-term investors. Even just giving one share is infinitely better than writing a check of an equivalent amount on an after-tax basis for you. So I'm always happy to help people think through how to do that, but giving appreciated stock is great.